Time for another stock review. This time we are talking Pfizer. We're talking about the pharmaceuticals once again. Can you make money out of this stock? It's been around for a long time, 175 years in fact. So we've got a lot of history here, and we're going to... Excuse me, it's being made live. Shall I leave that in? Well, it's real if I do, right? Flipping heck. I need some of the white stuff. There you go. All right, let's get straight into it. In this review, you're going to get a full back test. We're going to look at the financials, the solvency score, the profitability score, how likely you are to make money, the intrinsic value. We're going to take a close look at the website, learn about the history of the company, should you invest. We're going to see why what they say is the reason for investing. We're also going to look at the latest news, and we're also going to look at the financials. This is the S&P 500, the dividends. You might buy it for the dividends. All of that is going to be covered in this video, and hopefully you will discover whether you can make money from this stock, whether it's a good investment, and whether you need to scratch your chin and worry over it, or you can look over the numbers and decide, you know what, this is a good investment for me. Well, all that's going to be discussed, and we're going to see if the numbers stack up, the inside trading as well. We're also going to look at the latest sentiment around the stock. Are you ready? Buckle up. Now then, if it's your first time here, consider subscribing to my channel and do give us a like. It shares the video out to more people. This also accompanies the Meet the CEO series. That's right. You as an investor can get the CEO on my show. I've discussed and I interviewed many CEOs, with many more coming up. In fact, we've got one tomorrow from a solar company tomorrow. Very exciting. Space Solar Asti. That's tomorrow. How do you get them on the show? Well, first of all, you could send them this link of this video. This will trend on Google and YouTube. All my reviews do. And you can send it to them via Investor Relations website. You can email them. Also, perhaps you might like to create your own Reddit group, and I will support you so you can grow on Reddit or Facebook or whatever you might like to do. I will send you the videos of the reviews of the updated news. Also, I will send you the earnings reports, and you can build a community. And then they will get to find out about our videos and information, or you can tag them in, invite them in on the show. I never invite anyone. I don't believe in that. I leave it to the investors. I don't own the stock. I don't pump and dump the stock. I'm not in any stock apart from the S&P 500. I'm here to bring you the facts, the news, the information. Not here to pump and promote companies, but I do, and I would like to have them on the show so we can learn from them, learn about them, and help them grow. Because if they're a great company, we want more people to know about it. All right, there we go. If it's good news, I'll tell it. If it's bad news, I'll also tell it. As it is. So there you go. If all that appeals to you, tap the like button, leave me your comments below. I will reply to all of my members, and I hope you enjoy the review. So let's start from the very basics, and then we'll get down into the details as we go. So first of all, what is Pfizer, in case you've never heard of it? I'm sure you have, right? I know as a kid I used to have it as the Lemsip and the all the medicines and stuff like that when I had the flu and the cold. Anyway, over the most recent range, over the maximum range that we have here, which is all the way back until 2020. So is that 2020? No, 2000. Beg your pardon. So 24 years. It's been down over 24 years, and recently it's been sort of climbing like the S&P, but it's all gone straight back down. Is it good time to buy it now? Well, over 24 years you've made no money at all. However, there is a dividend here, so this stock goes sideways because the dividend is supposed to compensate you. So if you can get a 6% dividend, which is what we're talking about, and we'll share with you shortly, if it's consistent, if it's always paid out and always increases, it qualifies for a dividend king, and then you might be able to live with the fact it's gone down. But if it's not, we'll cover all that later in the video. Anyway, without further ado, let's go and look at it. Pfizer is a research-based global biopharmaceutical company. It's a bit like J&J, if you like. Think of it like that. Anyway, which engages in the discovery, development, manufacture, marketing, sales, and distribution of biopharmaceutical products worldwide. The firm works across developed and emerging markets to advance wellness, prevention, treatments, and cures that challenge the most feared diseases. The company was founded by Charles Pfizer Sr. and Charles Erhart in 1849 and is headquartered in New York. The listed name is Pfizer, PFE. Albert Bourrier is the CEO. So Albert, we'd love to have you on the show, love to learn about your business, share it with the news, and build the most honest review you've ever had on the stock. And I'd love to get to know you. So everyone knows how to do it. Look below in the description of the video, and you'll also find the invitation for the CEO video in there as well. So you can invite the CEO with your own invitation video. It makes it even easier for you. 88,000 employees, headquartered New York, and 1849, a solid blue chip then, right? Maintenance requirement, 25%. Very low risk if you're buying it on margin. Let's scroll down. The market cap is 157 billion. 52-week high, 42. 52-week low, 25.61. So it is a 52-week low just a short while ago at 25.61. We're currently at 27.82. So is it a good time to buy? Well, we'll work it out in a minute when you look at the dividend payments. Okay, 6% is the dividend payment. Very nice dividend, as long as it always pays out and as long as it always increases. Now, buying a dip could be a good time to get Pfizer. Average volume 37 million, and today's volume is 9.67. Okay, very good. Let's scroll down, see what the Morningstar say. I don't like this. They're paid to review the stock. Mine are unpaid, unbiased. Anyway, nevertheless, they say it's a hold, 40% buy. No one's selling it at all. I wouldn't thought anybody would at this level. But this was done just a month ago. So it's relatively new. The bulls are saying Pfizer's decision to divest its off-patent division should result in a faster-growing, innovative company. It's a bit like thank you, PhilJet. This is being made live, of course. This is a bit like J&J. They separated their company and to be more profitable, and it will be good for them in time. The likely decline of COVID-19 products will create a drag on growth as the pandemic recedes. That's what the bears say. I don't see that as really a bearish case because it was only a macro condition anyway. It was a one-off moment. I think there are other things, before COVID. We've had Pfizer do okay over the history. So I'm not too worried about that. Anyway, as you can see, declining earnings here. As you can see, they've been beating earnings, but declining, consistently declining. But we're just starting to see things improve, and expectation is it's like to go up. So Q3 23 was probably a good time to buy this stock. That was probably around about its all-time low, which was 25, but we're at 27 right now. What do you think? Anyway, we're expecting things to improve. The earnings is on May the 1st. If one of my members only perks super chats me and says, can you work late? Can you go early in the morning and do a pre-market show? I will. And we'll cover the earnings if one of my members so requests it. Okay, so let's have a look. I used to be in this. Look, I used to own it for a while. Anyway, who else is buying the stock? No surprise, Moderna, of course, Vitris, Johnson & Johnson, AstraZeneca, AT&T, Bank of America, old school, dividend stocks, solid stocks. So no surprise, the stock is going to be relatively stable, even though it's been down recently. But because the dividend, that's how it works. If you're going to have a high dividend stock, the stock's probably going to go sideways or down for a while because you're getting a dividend. Whereas if you get a growth stock, you're not going to get a dividend. It's kind of horses for courses, if you like. Anyway, if you like it so far, tap the like button and please do subscribe as well. Okay, fantastic. Now then, what do you think of this stock so far? Do you think we can make money from this? Chart's a bit scary, but we're going to look at the dividend now. And so, Mr. Jordan Smith, before you get your credit card out and order some some Pfizer. Let's see if it all stacks up. All right. Anyway, the first thing that we're going to look at is the website. Let's go and have a look at the website. Starting nice and basic, and then we'll go to the main figures in a few moments. So you got to get to the end of the video to get the meaty stuff, right? Because a lot of people, they only want to watch like 1 minute of a video. They go, oh, I can't be bothered with this. That's why we make it like a cartoon at the beginning. Nice and simple, right? 175 years of Pfizer breakthroughs. We're celebrating 175 years of daring scientific innovation, and we're not done yet. Every day we're channeling our passion and resources into delivering innovative therapies that challenge the face of healthcare. Let's outdo yesterday. Follow our progress as we accelerate the next generation of cancer treatments. Wouldn't that be great? Wouldn't that be great? Many people believe there's a conspiracy like, oh, we could have cured cancer years ago. It makes too much money. We can't cure a cancer. I'm not so sure, because how much money would you make from curing cancer too? So that, there's an argument on both sides of that. This is, of course, our founder, Mr. Pfizer, all those years ago. A little bit of history there for you. 175 years and still going strong. Solid company. All right. Anyway, let's have a look. Let's have a look at this image over here. Look, the penicillin, sodium, Pfizer. Look at that. That's how it was delivered all those years ago. Interesting, right? Anyway, scrolling on down, what we're going to do now is take a look at the latest news of the stock and why you might want to buy the stock. Why invest? Pfizer is a research-based global biopharmaceutical company. We apply science and our global resources to bring therapies to people that extend and significantly improve their lives through the discovery, development, and manufacture of medicines and vaccines. Latest news, just a week or so ago, in fact, March the 13th, so just over a week ago, European Commission approves Pfizer's Prevnar 20 to help protect infants and children against pneumococcal disease. This is good, an approval. Remember, these type of companies spend a lot of money doing research, and it takes a long time for things to get through, and then they have to get FDA approval and all those things. And once they do, of course, it's good news for the business. So they announced that the European Commission has granted marketing authorization for the company's 20-valent pneumococcal conjugate vaccine. Always difficult when I talk biopharmaceuticals. I always dread it. Anyway, I read these live, remember. Marketed in the European Union under the brand name Prevnar 20 for active immunization for the prevention of invasive disease. Pneumonia and acute otitis media cause a streptococcus phenomena in infants, children, and adolescents from 6 weeks to less than 18 years of age. So I'm not going to read all of this. You might want to pause this because we are going to move on to the numbers. If you want to pause this now and zoom in, you can see more about it. So let me put that on the screen. This is good news. It's got an approval. So always good to see. So you might want to pause that and go for all of that. I'm not going to spend all the time on that. We're going to go now into the numbers. Okay, so without further ado, let's get into the numbers and see if it all stacks up and if you can make money out of this stock. If you tap the like button so far, left a comment below, I will reply to all of my members. So here we go. Let's look first of all at the intrinsic valuation. Overvalued by 19%. Even now, with it being down so much, it's overvalued by 19%. Now then, bearing in mind, people buy this stock to own it for the dividend. So if you've got a really high dividend, and we'll come on to how much the dividend is worth in a moment, if you've got a really good dividend paying stock and it's undervalued as well, that's the golden chalice, because you've got a good dividend which is always paying out like a J&J Coca-Cola dividend king, and we'll cover it in a moment and see if it is. And if it's undervalued, perfect. This is currently overvalued because people will always buy it. However, best case, 29% undervalued. the best case. Worst case, 42% overvalued. But remember, you can overpay for a stock that gives you a good dividend as long as it pays out all the time. So can you do that? So is it a good value? Is it a good time to buy it right now? Well, 19%. I don't mind paying a 25% for a high growth stock. This isn't a high growth stock, but it can grow from where it is now, definitely, and the dividend can compensate you. So far, on these numbers alone, it's a buy from me. It was better a little while ago, but still pretty good today. Anyway, let's move on down. Let's do in real time a back test to see the correlation between the price and the valuation. All right, back test, analyzing the results in real time. There you go. The correlation is 16%. You might want to zoom in and pause that if you want further information there. But the best time to buy it was at 22. That's when we wanted to buy it. 27 now. Well, it's not too bad, there was a slightly better time, but this is still a relatively good time as long as the dividends pay out, and we'll cover that in a moment. Now, we've got the earnings coming up in May. If we do get a member super chat and say they'd like a review, I will do the review and I'll go extra hours in the morning and cover it. But for now, though, let's have a look at the Q4 earnings. Thank you, E equals MC. I love it. You should miss the 2, the squared. Anyway, very good. Bit of Einstein. In the midst of evolving market conditions and strategic pivots, the company maintained a 7% operational revenue growth, reporting 58.6 billion, excluding Comirnaty and Paxlovid. The dramatic sales decline in COVID products, of course, that's what the bears are all talking about now, with a 41% operational decrease and a 3.5 billion revenue reversal, signaling a shift from pandemic-driven demand. Despite this, newly approved vaccines and blockbusters like Vyndaqel and Eliquis is contributed to an 8% year-over-year revenue growth when settling COVID products aside. Okay, so putting the COVID products aside. Like we just talked about the new approvals now, you're bound to get a drop with COVID if you were massively involved in that. It's no surprise, but it was a boost for a while. Now the stock is coming back into balance rather than failing. The company aligns future projections with investments in commercial and manufacturing capabilities to propel its portfolio, particularly the Seagen acquisition, maybe Seagen, I don't know, Seagen or Seagen acquisition depends from the UK or in America, anticipated to 120 million contribution with an adjusted EPS forecast of $2.05 to $2.25 for 2024. So the outlook is looking better. Inclusive of a 40-cent dilution from Seagen, the aim for an operational revenue increase of 8% to 10%. Confident in 4 billion cost savings from realignment and eyeing long-term shareholder value. Okay, let's look at the financials. Let's zoom in here. Now then, as you can see here, we've got the revenue has dropped down 15%. So the stock has come down, but so has the performance of it. So that's why it's still saying it's overvalued, because the stock price has come down and the company isn't increasing. It's now underperformed because of COVID. The point is, has it come down by enough to bring it down to make it a viable proposition? Well, it's all about those dividends. We'll come to that in a moment. So the revenue is down 15%. The operating income is also down 30%. You can see that there. And the net income is down 80%. Wow. Hell of a drop, isn't that? But we are expecting to see things improve, though. Look, we are expecting to see things improve going forward. So this could be a nice dip to get this. Financing income is up 67%. Investing cash flow is up 26%, which is negative, of course. Operating cash flow is negative 28%. The balance sheet, what we don't want to see is more liabilities and assets and not too much debt. 226 billion in assets, of which 12 billion is in cash. So we've got a decent amount of cash, 226 billion in assets. Liabilities, that's good. It's a good balance. 137 billion, and long-term debt is 61 billion. Half of its liabilities is long-term debt, 61 billion, and we have 12 billion in cash, so we can't pay all our debts off. That long-term debt, by the way, is quite significant. It's 44% of its liabilities, 44%, and of course, rates being high the way they are, we'd like to see that come down. That's quite high. But a blue chip company like this isn't going bust. It's got cash. It's got a good business. It's got good history. It's got a good future, I'm sure. But nevertheless, they do have a lot of debt, a lot of research been done, a lot of investing done. But at the end of the day, they've got 226 in assets and 44 in debt. So it's okay. It's not the best balance sheet in the world. Of course it isn't. It's a third. So it's 44% of its liabilities is in long-term debt. We don't like that. We don't like that. Short-term debt is about 5%, just there off the screen. There, look. Anyway, so the balance sheet isn't great. It's not ideal, hence why the stock price is down now. Is it a buy from me so far? Well, it will come down to the dividends, I'm afraid. Gross margin, 70%. Very nice indeed. Operating, and it's just going sideways, really. But that's okay. Established business doesn't have to keep growing. Just keep doing what it's doing forever and ever and pay its investors a dividend. Nothing wrong with that. 22% operating margin, net margin 4%. And you can see the rest. You might want to pause it if you want further information. There we go. Profitability, 63%, very, very good. Just off from tech stocks, like software stocks, but very, very good. 63% is good. The only thing that's amber is the 3-year average ROE is average. It's not green and great. So there we go. Now, solvency score. As I said, they're not going bust, of course. 40%. We're not green, but we're about to turn green. We've gone from red to amber, and we're just starting to turn green. As you can see, around about 45-50% will turn green. Just short-term solvency. We don't like this amount of debt, but it's going to be fine long-term, no doubt about it. But we'd like to see that come down, and we will see that come down when rates come down, interest rates come down. Can you imagine what the interest payments are on that amount of debt? It's many, many millions. When that comes down, and it will come down in time this summer, we're expecting it, they'll get a cash boost. No doubt about that. So this solvency score will improve. Wall Street targets, worst case scenario, 5% down over the year. I can live with that. I can live with the 5% if I'm earning 6% on dividends. I can live with that. 19% upside is going to beat the S&P, or 89% on the best case scenario, and that's not including the dividends. So I can live with that. That's good. Competition, I'll give you the link to the competition above my head down below in the description, and you can compare J&J and you can see what their position is in comparison and so on and so forth. Right. This is some good news as well. More good news here. So far, it's a buy with this news if we do get the dividends at the end. Insiders are buying. During the last 12 months, insiders bought 156,000, which is not that much, but they have bought some. The last transaction was October the 15th, 2023, by a director, Gottlieb Scott, who bought 79,000. No one's selling any shares. They're just buying a bit, but that's okay. It's not good. It's not negative though, right? Okay. What about it? Now then, 2 weeks ago, we've got a bit of, I'm not going to look at that. I will look at this news here. This is recent. Let's have a listen.
Move to tell you about Josh Brown adding to Pfizer. Something he says is one of the best opportunities in the entire market right now. Tell us more.
Yeah.
Yeah, I mean, this is very far away from what people are doing. This stock is on the 52-week low list. It's actually at a 11-year low. We haven't seen it trade at these prices since December of 2013. What's happening here, in my view, is very simple. There's just no great near-term catalyst for this stock, and as a result, people are coming out of it and looking for other things to do that might be more rewarding in the shorter term. Yep. And from my perspective, that sets this up perfectly because I'm looking to be an investor here. I'm not looking for any kind of short-term pop in the stock. I don't even know if I'm done buying it yet, but I added to my position by about 50% yesterday as it was making a new 52-week low. The people that watch this stock, this show, know that I'm usually looking for stocks that are closer to a 52-week high and are exhibiting strength. But I think that this is a very special situation. COVID just absolutely wrecked this company. They went all in on Paxlovid and on the vaccines. Then the disease became endemic. Nobody needs the pills. Nobody cares about the shots. And their revenue was just demolished. That's the thing, though. That's why the stock's in a 60% drawdown, paying almost 6.5% dividend yield. And they made an acquisition of Seagen, which I think is going to have huge potential in the coming years for oncology drugs. So this is a stock that's been around, a company that's been around for 175 years. They've had other issues like this. People were worried about Viagra coming off patent in 2017. They got through that. Before that, people were worried about Lipitor in 2011. They always find a way to rebuild revenue growth and reorient the company. I don't think this time will be any different. So I am a buyer under 30, and we'll see what happens in the coming years.
All right, it's getting a move as we're having this.
I totally agree with that, 100%. That's exactly what I'm saying. It's a buy from me, no doubt about it. Let's look further down the sentiment. Let's have a look over the last 90 days. Again, it's coming to that dividend, and that's what we're talking about in a moment. Last 90 days, 69% good news. Now 79% good news, 7 days. Now 87% good news, and today just good news. Yep, this is good. This is good. Now let's go and look now. This is the most important part. This is what it's all about now. First of all, let's compare to the S&P. How does it perform other than COVID? Well, there you go. Pfizer. It followed the S&P since 2011, look, pretty much solidly, which means it's a solid company. And then COVID, it got destroyed. People don't need it anymore, and boom. But this is now an opportunity. So you can see the difference there. $10,000 in the S&P from 2011 would have returned you a 51. This is reinvesting the dividends, by the way. Important to note that. You'd have $51,000, whereas Pfizer, $10,000, would have still given you $26,000. So you've nearly a 3x, including reinvesting. But you've now got a good discount on this. This is no doubt about it. This is a good opportunity. But now let's look at this. This is what it's all about. So if you liked this video so far, have you left a comment? This is definitely a buy for me as long as this is consistent and increases payouts. Right, let's go back to 2006. This is the furthest we go back. We came out with 96 cents. It went up, and then we had to rebalance. They were paying too much. They couldn't do that. So we sport the record, but nevertheless, from 2009, 80. It dropped. Now we start again, right? 18, 18, 18, 20, 20, 20, 22, 22, 24, 24, 24, 26, 26, 26, 28, 28, 30, 30, 30, 30, 32, 32, 32, 34, 34, 36, 36, 36, 38, 38, 38, 38, 39, 39, 39, 40. Yes, I know I sound like an auctioneer. Paying every single time, and increasing. The first few, yes, that's how it goes. But is it a dividend king now? 40, 40, 41, 41, 42. And now we have 1st of March, it paid out 42. The next payout will be 7th of June. So every quarter it pays out. And so it's on the brink of a dividend king. It doesn't have enough dividend history yet that I know of. It may go back further. I'm not going to research any further back. So it's behaving now like a dividend king. I don't know if it does qualify without going back over its entire history. This video would be like 3 hours long if I did that. But nevertheless, we have had consistent payouts and increasing. So it's behaving now like a dividend king. So yes, it is a buy from me. Let's wrap this up right now. This is definitely a buy for me, 100%. Was there a better time? Yes, there was. If we look back over the week, it's been pretty flat. Over the last month, it's up 3%. You could have bought it here. This was the time to buy it in March, the beginning of the month, when it was 25. That was the time to do it. But in fact, that's only like, 3 weeks ago? That was the perfect time. But nevertheless, this is okay. Not bad at all. As you heard there from that interview, anything under 30 is good. And you've got until the ex-dividend date, 25th of April, to have settled funds. So you've got a couple of weeks to buy this, to get it in settled, to get those dividends if you want to do that. So that's always a good time. So there you go. There's my final thoughts are, yes, this is a buy from me. Click above my head, down below in the description. You'll find all of my links here for my extra channel. And if you want to invite the CEO, the link is down there as well. You also can get my alpha spread, which is what I use to review these stocks. My members can get a lifetime discount, which pays for the membership, or you get a free plan if you just want to do one stock and you don't want much detail. All right, click above my head, down below, over here, get the CEO on the show, start your own little group, and I'll support you. And I'd love to have them on the show. There you go. It's a buy from me. Absolutely. Until next time, as always, take care of yourselves and each other.